Welcome back, everyone, to the Daily Financial News Roundup. We've got a lot to cover today, from international trade tensions to tech advancements, market moves. Lots going on. So let's dive right in.
Sounds like a busy day in the financial world. Where should we start?
Well, the U.S. Postal Service just made a pretty big announcement.
Uh-huh.
They're temporarily halting packages coming from mainland China and Hong Kong, but letters are they're still okay for now. This is all happening because of those recent tariff changes. The ones that got rid of the exemption for goods under $800.
Right. So this move really seems like a major escalation in this whole U.S.-China trade war thing. What's interesting to me is all those packages that were coming into the U.S. under that de minimis tax loophole, almost half of them were from China.
Yeah.
And that's a big reason why those e-commerce giants like Shein and Temu have been doing so well. They could offer crazy low prices on stuff shipped directly to people.
It's amazing how cheap some of that stuff is.
I know, it's really unbelievable. But closing this loophole could change the whole e-commerce landscape. I mean, we could see higher prices for consumers who love those platforms.
For sure. And China's not just sitting back and taking it. They're hitting back with their own tariffs on a bunch of U.S. products.
Yeah.
Coal, crude oil, agricultural machinery, even large engine cars.
Yeah, this is definitely a strategic move by China. They're trying to put pressure on certain industries. It'll be interesting to see how these tariffs impact both economies. How it affects those U.S. industries that rely on the Chinese market, and of course the consumers who might have to pay more for imported goods.
Definitely. The EU is also getting nervous.
Yeah.
Trump hinted that tariffs on their goods might be coming soon, too. He claims they don't import enough U.S. products.
Well, that just adds a whole other layer of complexity to this already tense global trade environment. The EU is a major trading partner for the U.S., and these new tariffs could really disrupt supply chains.
Yeah.
And of course, increase costs for businesses and consumers.
And economists are already saying that all these trade wars are going to lead to higher prices for us, for U.S. consumers,
Yeah.
and could even fuel inflation. We're already seeing companies like Estee Lauder having to cut jobs, and Mattel, the toy company behind Barbie and Hot Wheels, might have to raise prices just to deal with the tariffs.
Yeah, it's already having a real impact. It makes you wonder, are these tariffs just a tactic, or is this the start of a real trade war with long-term consequences for the global economy?
Let's shift gears a bit and talk tech, specifically AI.
Mm-hmm.
Google just reversed their pledge to not use AI for weapons.
Yeah, that's a controversial move. It has a lot of people worried about the ethical implications. Google is saying that democratic governments need AI for national security,
Right.
but this could easily lead to an AI arms race and blur the lines when it comes to ethics in AI development.
It's a slippery slope for sure.
Uh-huh.
Meanwhile, Australia has banned the Chinese AI chatbot, DeepSeek, from government devices. They're citing security risks.
Yeah, that ban is part of a growing trend. Governments are getting wary of AI tech developed in countries they see as rivals. Data security, privacy, potential for misuse, it's all contributing to this increased scrutiny of AI companies, especially those with ties to foreign governments.
On a lighter note, OpenAI, the creator of ChatGPT, just rebranded with a more organic image. Apparently, they're facing some heat for their for-profit model.
It seems like they're trying to soften their image, emphasize a more human-centric approach, probably trying to address those concerns about their profit motives and reassure the public that they're developing AI responsibly.
Well, while OpenAI is working on their image, Google's AI is already making serious money. Their AI-powered search features are bringing in revenue comparable to their regular search ads. Looks like AI monetization is here to stay.
Oh, absolutely. This shows just how much potential AI technologies have, and the AI search market is getting super competitive. Google's up against players like SearchGPT, Perplexity AI, Bing AI, even China's DeepSeek. Everyone wants a piece of the pie.
Speaking of competition, PharmaBro, Martin Shkreli, has been talking about Palantir's recent stock surge. He thinks their projected cash flow growth justifies that valuation.
Well, Shkreli's opinion is definitely interesting, but, Palantir's got a controversial past. Their involvement in government surveillance programs has a lot of people concerned. Their recent financial performance is good, but whether they can keep that up and whether their business model is ethical, those are still up for debate.
Yeah, for sure. And for anyone who bought Crocs stock, don't forget that the deadline to join that class action lawsuit is coming up. March 24th is the last day.
Right. That lawsuit is a good reminder that even investments that seem safe can have hidden risks. It's so important to do your research before making any investment decisions, even with brands you think you know.
On a more positive note, Chinese humanoid robot maker, Agibot, is setting up a production facility in Kazakhstan.
Oh, wow.
They're aiming to make the country a regional hub for robotics and AI.
That's a smart move for Agibot. It gives them access to a new market and could mean lower production costs. And for Kazakhstan, it's a chance to become a leader in robotics and AI. Could bring in a lot of investment and boost technological innovation.
It's a win-win.
Yeah, seems like it.
All this is happening while gold prices are hitting all-time highs. Trade tensions and instability in the Middle East are really driving that surge.
Yeah, gold is the classic safe haven asset, so this isn't surprising. The trade war with China, all those geopolitical uncertainties, and the potential for inflation are making investors nervous. They're turning to gold for stability.
Even Peter Schiff, who's a big gold advocate, is calling this rally extremely bullish.
Yeah, that just shows how strong this rally is. It makes you wonder if this momentum is going to keep going and what it means for other assets like Bitcoin, which has also been doing well, but not as well as gold.
Right. And to wrap things up, a little news for all the Apple fans out there. Apple Care Plus is getting more expensive.
Ah, figures.
Apple quietly raised the monthly price for iPhones, and they're getting rid of the upfront purchase option in stores.
Well, this move probably means more recurring revenue for Apple. It could also be part of a bigger trend of companies switching to subscription models for their services and products.
That's it for our headlines today. Now let's dive into some of the details and what all this means for the global economy, individual businesses, and of course, consumers like you.
I'm ready when you are.
Okay, let's start with that trade war. China just announced a new anti-monopoly investigation into Google.
Oh, really? That's interesting because Google's search services have been blocked in China since 2010. I mean, China only makes up about 1% of Google's global sales, but this could mean things are escalating between the US and China. Could have some bigger geopolitical implications.
Yeah, for sure. And China's also added PVH to their unreliable entity list.
PVH.
That's the American company that owns brands like Calvin Klein and Tommy Hilfiger.
Oh, wow. That list was created in 2020, and it makes it really tough for companies to do business in China. PVH might have to deal with sanctions, fines. They could even see work visas for their foreign employees revoked. This just shows how China's using these entity lists to put economic pressure on companies. It just adds another layer of complexity to the U.S.-China trade relationship.
It definitely does. And these retaliatory measures aren't just aimed at companies. China's also put export controls on 25 rare metals, the ones used in all sorts of electrical products and even military equipment.
Well, that's a strategic move. China produces almost 90% of the global output of these rare metals. These controls aren't a complete ban, but companies that want to export these metals from China are going to need licenses now. This could really mess up global supply chains, especially for electronics.
What about the U.S.? How does this affect us?
Well, the U.S. relies on China for a lot of these rare earth metals, but it's interesting that China hasn't targeted the critical metals that it imports from the U.S. The ones used in high-end chips and semiconductors, pharmaceuticals, aerospace equipment. It seems like they're trying to avoid escalating things in those areas while still maintaining leverage in others.
It sounds like President Trump might have a plan to find other sources for these rare earth metals, though. He's been hinting at a deal with Ukraine.
That would make sense. The U.S. probably wants to reduce its dependence on China, especially with all this trade tension, and because these metals are so important for industries, including defense.
Okay, let's move on from trade wars for a second and talk about something else. This potential U.S. sovereign wealth fund.
Oh, right.
President Trump just signed an executive order to start setting one up.
That's a big deal. The U.S. doesn't have a sovereign wealth fund right now. Those are usually used by countries with extra revenue to invest in different assets.
So what would the point of having one be?
Well, President Trump said it could be used to pay for big national projects like infrastructure, medical research, maybe even buying TikTok.
Wait, TikTok? I thought that whole thing was resolved.
The TikTok saga has been a wild ride. The previous administration told TikTok's Chinese owner to sell their U.S. operations, but then President Trump deleted the ban. Now he's saying this new sovereign wealth fund could be used to buy TikTok, although he also mentioned maybe Microsoft or some other tech giant could buy it.
So this potential fund could be used for anything from infrastructure to social media.
Yeah, it could have a huge impact. We need to wait and see what happens. The details about where the funding would come from and what their investment strategy would be are still being worked out, but this could really change the U.S. financial landscape, maybe even influence global markets.
Definitely something to keep an eye on. Okay, let's talk about gold. Its record-breaking performance has been all over the news. What's behind this gold rush?
Well, it's a combination of things. The trade war with China, all the geopolitical uncertainty, and the possibility of inflation are making investors nervous, so they're turning to gold. It's a safe haven asset. And even seasoned investors like Peter Schiff, who are always bullish on gold, are saying this rally is something special.
Gold's even doing better than Bitcoin right now.
Yeah, Bitcoin has gone up too, but gold's performance has been much stronger. It shows how much people value gold as a stable investment that holds its value when things are uncertain. It's the classic flight to safety when the economy and geopolitics are shaky.
Makes sense. And speaking of prices going up, Apple's been quietly raising the price of their AppleCare Plus service.
Oh, of course they are.
They've increased the monthly price for iPhone coverage, and they're phasing out the option to buy it upfront in stores.
Yeah, it seems like every company wants to switch to a subscription model these days. It gives them a predictable income, and it's changing how people spend money.
Well, that's our news roundup for today. We've covered trade wars, AI advancements, market jitters, and even the price of gold. It's been a busy day in the financial world.
It really has. It just shows how connected everything is globally and how events in one place can affect businesses, investors, and consumers everywhere.
It's a lot to take in, but thanks for breaking it all down for us.
My pleasure. It's important to stay informed in this complex world.
Absolutely. Stay tuned, everyone, because we're going to be right back after a quick break.
We'll be diving deeper into some of these stories and what they mean for you. We're back with more financial news. This time, let's look at the toy industry. It seems like they're really feeling the pressure from all these trade tensions.
Yeah, toy companies, especially Mattel, they're dealing with slower sales and higher costs because of those tariffs on Chinese imports.
Right, and that probably means even higher prices for toys, which could really impact how much people spend in the toy market.
It's a tough spot for those companies. And the alcohol industry is not doing much better. Diageo, the company that makes Guinness and Johnny Walker, is already trying to figure out how to deal with these tariffs, especially the ones that might hit Mexican imports.
Makes sense. They've got to be prepared. The alcohol industry is very vulnerable to trade disruptions. Tariffs on imports can really mess with prices and what consumers are willing to spend. Diageo's probably looking for other suppliers or changing their pricing so they can stay competitive.
It's a smart move. And speaking of things getting more expensive, let's not forget about avocados. Experts are predicting that Super Bowl avocados are going to cost a lot more this year.
Yeah, those guacamole bowls could get pretty pricey if things don't calm down. It really shows how connected our global food supply chains are. You know, something happens on the other side of the world and suddenly your snacks cost more.
It's crazy how these things work. So what's the overall mood in the markets right now? With all this going on, people must be nervous.
Well, global markets did take a bit of a dip on Monday because of those tariff threats, but then that last-minute deal with Mexico gave everyone a little bit of relief. But still, I'd say investors are being cautious. They're worried about a full-blown trade war and what that would do to global economic growth.
So, a bit of a roller coaster ride then. Any other key takeaways from today's news?
I think the ethical questions surrounding AI, the growing security concerns about AI data, and the fact that companies are finding more and more ways to make money from AI, these are all trends that are going to shape the future. It's important to stay informed and understand the potential benefits and risks.
Definitely. And we shouldn't forget about those deadlines coming up for investors. The Crocs lawsuit and all the scrutiny of Palantir's valuation, those are things to watch closely.
Absolutely. Those stories could have a big impact on the market. The outcomes could really affect investor confidence and market trends.
And for anyone who's holding on to gold, it looks like things are going their way right now.
Yeah, gold hitting record highs just goes to show how much people trust it as a safe haven asset when things are uncertain. It'll be interesting to see if this trend keeps going and what kind of impact it has on other investments.
Okay, so we've talked about trade wars, AI, market jitters, even avocados and gold. Now, you mentioned some retaliatory measures from China that aren't tariffs. What are those about?
Right, so China's started an anti-monopoly investigation into Google.
Really?
Yeah, it's interesting because Google's search services have been blocked in China since 2010. I mean, China only accounts for about 1% of Google's global sales, so the financial impact might not be huge, but it's a sign that things between the U.S. and China are getting worse and could have bigger consequences.
Speaking of consequences, China's also added PVH to their unreliable entity list.
PVH, remind me.
That's the American company that owns Calvin Klein and Tommy Hilfiger.
Oh, right.
And being on that list makes it super hard for companies to do business in China.
Yeah, that list was created back in 2020, and it's basically a way for China to punish companies. PVH could be hit with sanctions, fines, even have work visas revoked for their foreign employees. It's another tool that China's using to put pressure on companies,
Yeah,
and it just makes the U.S.-China trade relationship even more complicated.
definitely. And they're not just going after individual companies. China's also put export controls on 25 rare metals, the ones that are super important for electronics and even military equipment.
Right, those metals. China produces almost 90% of the global output of these rare metals, so they have a lot of control over them. These controls aren't a complete ban, but now companies that want to export these metals from China need to get licenses,
Wow.
which could lead to a big drop in exports.
So how does this affect the U.S. specifically?
Well, the U.S. relies on China for many of these rare earth metals. But what's interesting is that China hasn't targeted the critical metals that it imports from the U.S. The ones used in things like high-end chips and semiconductors, pharmaceuticals, aerospace equipment. It seems like they're trying to avoid making things worse in certain sectors while still keeping their leverage in others.
It sounds like a chess game almost.
Kind of, yeah.
Yeah.
And President Trump seems to be looking for other sources for these rare earth metals just in case. He's been talking about a potential deal with Ukraine to secure more supplies.
Oh, interesting.
It looks like the U.S. wants to be less reliant on China, especially with all the trade tension, and because these metals are so important for various industries, especially defense.
Okay, let's switch gears again and talk about this U.S. Sovereign Wealth Fund. President Trump just signed that executive order to start setting one up.
Right. That's a big step. The U.S. doesn't have one of these funds right now. They're usually set up by countries with extra revenue to invest in different assets.
So why would the U.S. want one now?
President Trump has said it could be used to fund big national projects, things like infrastructure improvements, medical research, and even buying TikTok.
TikTok again. I thought they were done with that.
That whole situation has been a bit messy. The previous administration wanted TikTok's Chinese owner to sell its U.S. operations, but President Trump put a hold on that. Now he's suggesting this new sovereign wealth fund could be used to buy TikTok, although he also mentioned the possibility of Microsoft or other tech giants buying it.
So this potential fund could have a really wide reach.
Yeah, it could be used for anything from infrastructure to social media. We'll have to wait and see how it all unfolds. The details about how it'll be funded and what their investment strategy will be are still being worked out, but it could have a big impact on the U.S. financial landscape and maybe even globally.
Definitely something to keep an eye on. And on the topic of big financial news, gold prices have been making headlines hitting all-time highs.
It's been a wild ride for gold, and it's all thanks to those trade tensions and geopolitical uncertainties we've been talking about. Even seasoned investors like Peter Schiff are saying this rally is something special.
Why is gold doing so well?
It's a combination of factors: the trade war with China, instability in the Middle East, and the fear of inflation. Investors often flock to gold when they're feeling uncertain because it's seen as a safe haven asset, something that will hold its value even when things are chaotic. And with everything going on right now, people are looking for that stability.
It seems like gold's even outperforming Bitcoin in the current market.
Bitcoin has seen gains, but gold performance has been much stronger. It really highlights gold's lasting appeal as a store of value, something that can protect your wealth against inflation, especially during times of economic and geopolitical uncertainty. It's a classic flight to safety.
Right, people want security in times like these. And speaking of things getting more expensive, Apple has been quietly raising the prices on their AppleCare Plus service.
Ah, typical Apple.
They've increased the monthly cost for iPhone coverage, and they're getting rid of the option to buy it up front in stores.
Yeah, it seems like every company is moving towards the subscription model these days. It gives them a predictable income stream. And it also reflects a change in how consumers are spending money these days, moving more towards subscription-based services.
So from trade wars and AI advancements to market jitters and the rising cost of gold and even AppleCare, it's been a wild ride in the financial world.
It really has. It just shows how connected everything is globally and how something that happens on one side of the world can have a ripple effect on industries, economies, and even our daily lives. It's a lot to digest.
It is, but staying informed and understanding these trends is key to navigating this complex landscape.
Absolutely. Before we wrap up, any final thoughts for our listeners?
Stay curious, stay adaptable, and remember that knowledge is power in these dynamic times. The more you understand about the forces shaping the world, the better equipped you'll be to make informed decisions, both personally and professionally.
Couldn't have said it better myself. And with that, we'll wrap up today's Financial News Roundup. Thanks for joining us. It's a lot to wrap your head around. You've really helped to break down these complicated issues.
Well, it's important to remember, we live in a world where everything's connected now more than ever.
Yeah, that's true. Something happens on one side of the world,
Yeah.
and there can be instant consequences on the other side. It's like that butterfly effect thing, but on a global level.
Exactly. And that's why staying informed and understanding these trends is more important than ever. We can't just sit back and watch anymore.
So, for people like me who aren't financial experts, what's the best way to keep up with all this? I would say focus on the big picture. Don't just get caught up in the headlines. Try to understand the forces behind these events. For example, these trade tensions, they're not just about tariffs. It's about how power is shifting globally and how countries are competing economically.
That's a good point. It's easy to get lost in the day-to-day news, but looking at things more broadly is important.
Exactly. And don't forget about technology. Things like AI and robotics are changing everything so fast. They're creating opportunities, but also challenges that we need to be ready for.
It's definitely a lot to think about. Your insights have been really helpful.
I'm glad I could help. Knowledge is power, right? The more you know, the better decisions you can make.
Couldn't agree more. Any final words of wisdom?
Stay curious, stay engaged, and never stop learning. The world's changing fast, and the people who can adapt and stay informed are the ones who will succeed.
Excellent advice. Thanks so much for joining us today and sharing your expertise.
My pleasure. Always happy to shed some light on the world of finance.
And to all our listeners, thanks for tuning in to the Daily Financial News Roundup. We hope you found this discussion informative. Until next time, stay informed and stay ahead of the curve.